Welcome to the Value Builder Podcast, where we focus on real estate with a value-add mindset. Real strategies, real operators, real outcomes. Let's dive in.
Good morning, everyone. In commercial real estate, true value isn't found, it's created. Today, we're joined by someone who sees potential where others don't see it. Rafik Moore, who is CEO of BRAIT Capital, the firm specializing in value-add real estate. I know him for 5 years. So super excited to have him here in the studio. And I know it's going to be a great conversation. How are you, man, today?
I'm doing great. Thanks for having me, Saul. So nice to see you today.
Appreciate it. All right, so let's start with a question about BRAIT. What's the philosophy behind BRAIT? How do you approach it to your team and to the properties?
So BRAIT in Old English means uncut rough diamond. And just like a rough diamond that kind of looks like a rock, it's not that exciting to look at. Every property we find is like a rough diamond. And our goal is to uncover and unlock that value and make it shine and sparkle again after we do what we do, which is reconstruct it, adaptively reuse it, or lease the property to its fullest potential.
All right, awesome. Now, I learned a lot from you about value add. Now, as I mentioned briefly, we know each other over 5 years, and we improved many buildings together. The value add concept by itself really was taught by you, and it's not estimate what I'm saying. And really, there was fundamental things that it taught me about adding value and looking for distressed properties, how you get value to where it's supposed to be. Can you just share the fundamental principles about buying distressed properties or undervalued properties, how you get them to the maximum value?
I think the biggest concept that I've picked up in about becoming a person of value is from Jim Rohn. I used to listen to him for hours, 10, 15 years ago, and also Zig Ziglar. But at the end of the day, what do we do with these value add deals? All we do is find a distressed asset, find a property that is vacancy, some functional obsolescence, a property that people don't want, property that requires a, TLC, tender love and care. And then we get in there, we clean it up, we do what needs to happen and invite the community back into it. And then the property becomes one of the best looking, highest producing, 100% occupied assets. And that's how the value is created. It's pretty simple. You look at a distressed asset, you find a way to fix the distress, and that's how the values are unlocked.
Makes sense. Yeah. I want to stay here a little bit, and one thing, maybe that's obvious, to people who are doing it 20 years, but one thing was really instrumental, in being eventually successful in adding value is that you taught me when we look at asset right now, we not necessarily want to speculate that we're going to improve the property is going to be worth at some time more just because the market is going to be better. But we just simply getting that value to where other properties are. So pretty much we're not speculating that stock will go up. You just bridging the gap between what it's not to where it's supposed to be.
Yep.
And do you want to spend a few minutes over here on this concept?
Value investing is one of those things where you want to find a deal. What is a deal? Well, deal is something that is you're able to pick up below replacement cost, below comparable sales. Why? Because it's not fully rented, for example, or it's got maintenance issues and whatever. Our business is very simple. We pick up assets that are undervalued. And I picked up these concepts from Warren Buffett and Charlie Munger. I love their stuff, read all his books. And what we do in real estate here, we apply the same principles and concepts to identifying undervalued properties due to a lot of factors. And through a construction, leasing, property management, we make those properties shine. And ultimately, in the current times, when there's uncertainty, when the interest rates are high, when there's a lot of issues with tariffs and whatever, this happens to be the best investment strategy because there's a lot of distressed office right now, as you probably know, and there's a lot of distressed retail. And what we've done in our business is we go and pick up these properties at pennies on the dollar, and then we adaptively reuse them to create a product that's needed. A 90,000 square foot Sears or Macy's doesn't work anymore. But you know what works? small bay industrial is hot.
Yeah.
A lot of people want to rent. So what we do is chop it down to small bay, set up, and property that we bought for $1 million after spending another $1 million worth for. And that's basically the gist of our model.
Yeah, that makes sense. We definitely would like to dive in industrial. Before you do that, you mentioned office. And anything you think is going to happen with an office market will, many people say it's not going to come back. Some people will come back. It's going to be, it will be redeveloped. What's your take on it? Do you want to try to?
I'm sitting here tickled with excitement
Okay.
about a deal I made an offer on, office building. 76% office, the rest of it is flex space. I believe office as a product will continue. The problem is it's not in demand as it used to be. The demand has dropped. So all you got to do is reprice it at a new market rent and also reduce it. Like right now, the hottest product, believe it or not, is office that has been redone as a co-working space. And so co-working space in our portfolio, we buy the building and it's vacant. We rent each individual unit or room for $350 to $500. And we have no rooms left. They're full. But as a single 10,000 square foot space, good luck. And you sit there and you scratch your head and think, how can I attract the 10,000 square foot tenant? Well, they don't exist anymore.
Okay.
A couple of days ago, I was in Indiana. I made an offer on this 190,000 square foot property, and it's an office. It doesn't work, but it's 14-foot clear. It's a single level property. And my strategy is very simple: to blow out 30,000 square feet of office that's not needed, chop it down like a loaf of bread into multiple 3,000 square foot bays, put in a 12-foot door in the back, a little bit of office warehouse in the back, and the multiplicity of users or uses will precipitate building to be full again. And I think there is a tremendous opportunity in that specific strategy today to uncover a lot of value. We are looking at another deal in Waukegan. Blackstone owns it, and it doesn't work. It's basically single level office, 150,000 square feet and 3 properties. And I said, look, as long as we buy this thing at 8 cap on in-place income, which represents about $40 a foot, I think if we spend $20 to $30 a foot retrofitting all these properties into small bay, it's going to be worth $100 a foot, because demand for flex space and industrial spaces through the roof. Demand for office is not there. So you got to identify those opportunities. You got to know what the economics of the rental rates, the construction costs, and everything. But there'll be a lot of very, very wealthy people in the next 3 to 5 years converting all this office into flex space or co-working spaces.
Yeah, that totally makes sense. We definitely had a lot of success in doing this in Beaver Creek, and we'll jump into this. Flex and converting to small bay. Let's say Indiana deal or Waukegan. I think I know those 3 buildings in Waukegan. I've seen them, but in real estate industry, it's kind of, there's a vague definition, right? No, my definition of flex, it is 80%. Flex would be 50% in office and 50% warehouse. Small bay industrial is probably 10% office, 90% warehouse. So let's say, in your strategy, for example, Indiana deal, do you going from office to flex or going back from office to small bay industrial?
I think what we're going to do is pursue both strategies. Some of the beautiful offices with glass lines, that we'll leave them as is and just remove. But then what I want to do is respond to the market. If we have 30,000 square feet, and let's say we rent 50% of it as industrial, and then 50% of it is staying as office, but we don't have any demand, then we just pivot, remove the office, and rent it as a flex space. That is as industrial space.
Yeah, that's what I learned working with you, that you not necessarily know the crystal ball every single time, right? You sometimes have to pivot just because how the market would respond, right?
Yeah.
Let's say Beaver Creek deal, right? That was an amazing deal, but there was one thing we did not realize how much office demand it has also, right?
Yeah.
This,
See, that's a beautiful
co-working.
thing. We didn't put it
You
into
want
our
to talk about that deal?
Of course, yeah.
Yeah. How did you find it?
Beaver Creek. About a year and a half ago, in about August of 2023, one of my acquisitions guys, Sean, says, hey, this looks like a really good deal. It's got 8 buildings, 29 acres of land. It's office/flex space, but a University of Ohio is selling it at 5.5 million, I think was the asking price, or 6 million, something like that.
Yeah.
I've underwritten it. I said, look, this would be an amazing project for us to convert into flex spaces because all the demographics are good. It's got high income. It's got great, a decent density. We essentially offered 4 million. I think we got the price at 4.5, and we closed on it. Of course, you and I own this property together. And December of 2023, we bought it for 4.5 million. Today, we're sitting in May of 25. We just appraised the property, and it appraised at 14 million.
14 million when we finish the project, and a little
Yeah.
over 12 in as is right now,
Yeah,
because we
and
still have
we
to
so
finish 1 building.
far spent $2 million knocking out the offices and building it a lot of flex space. So if we are sitting at $6.5 million basis, and if we sold it today for 12 million, we would have basically made $6 million of profit. But who wants to sell when we can just cash flow and keep the property? So I'm very excited. I mean, it's a lot of work. We've done a lot of work. It's a very heavy lift, but at the same time, there's deals like that out there, and converting office into industrial, I think, presents a tremendous opportunity for these types of deals. And if you find it, by the way, there's a video on YouTube channel that I made about this specific case study, and maybe you guys can drop the link
Yeah,
below.
I'll drop the link
Please.
on a YouTube. Yep.
Please
Below.
like and subscribe. As a YouTube junkie, I'll
100%.
tell you, please like and subscribe, but watch the video because I go through the whole process. I show videos. I show exactly how we did it and what we did it. But I think for anybody in real estate who does value add, especially those residential guys, if you're flipping houses and making 30 to 50 to 80 grand a pop, converting these office buildings into flex spaces is what's in today. Is it going to last forever? No. I think there's a window of opportunity, 3 to 5 years. And then something else will come up. Maybe there'll be a mini storage. Like mini storage had a really good run. Now it's slowed down and the prices have dropped. Great. You got to be able to adapt to the market and find the model that has the highest return on investment and highest return on your effort.
Yeah, that's for sure. 100%. Yeah, I'm curious to know how many years we have left now, because that's not the first time I'm seeing it. I've seen that in self-storage. I've seen it in apartments when kind of go up and then eventually, drops in terms of demand. So this is what we see right now in small bay industrial, and small bay the industrial is hot. And just because, a lot of institutional capital buying in. Now,
Now, let me tell you one more thing that I learned recently. Everybody who sells office right now, because the probability of renewal is so low that you can pick up office at 10, 11 cap. Interesting, right?
in place income.
Yeah, on in-place income, 10, 11 cap on in-place income. Great deal. Well, not exactly, because when the tenants don't renew, you got office that nobody needs, and you got to basically go back to your NOI drops significantly, and you're stuck.
Yeah,
Now,
I
for
saw
us,
a couple of groups right now. Their model is buying. It's interesting. It's fair. So let's say, you have a 10-story tower, 5 stories occupied. You don't look at it at 5 stories exist. You just underwrite those 5 stories. If the leases are long enough, you buy it in place income at 10 cap, as long as almost like you're
I think
buying
I
a
like
half
that.
building.
I like that
And the rest
strategy
is
too.
upside is if it's ever going to lease.
The biggest challenge you will have today is all the banks are nervous about it because there's so many foreclosures. And big towers, I mean, they sell for, sometimes at $10 a foot, $20 a foot. And the replacement cost of this office is $200 a foot, for example.
Yeah.
But the point I'm trying to make is this. Here's what's unique. You buy this thing on a 10 cap on in-place income, but they are going to leave. And if your strategy is to blow out the offices, put in a garage door or dock, and make it into flex space, well, flex trades at about 7 to 8 cap.
Mm-hmm.
So you got a cap compression. So even if your income stays the same, you can still generate 20, 30% profit margin, by essentially the investors willing to pay more for flex spaces because there's more demand for it. And if you lose a tenant, 5 other guys will be interested in taking that space from you. And that is a really unique opportunity in the marketplace right now.
Yep, for sure. All right, I'm going to hit you with a personal question. And the question is, what risk you're happy you took? In other words, your life will be so much less if at that time you would not take that risk. Do you have a
Okay.
story about that?
That's a good question. I mean, take a risk all the time, but I'll tell you the biggest risk I took and it paid off is marrying my wife, Maria.
There you go.
I mean, the dividends I got are amazing. I got 3 children. They're all like my 10-year-old Natalie just got recognized as she got a junior award for math, believe it or not, which is amazing. So yeah, I mean, that was a big risk. When I was talking to my mentor, I was like, why would you ever marry, man? It's such a bad deal because we are growing, we're building empires, and then this lady shows up and automatically she owns 50% of your stuff. That's not fair. Unless,
Yeah.
and so she's like, you silly, life is about sharing experiences. Life is about sharing with somebody. And if you have these girlfriends that come and go, and unfortunately, you can't really build anything of substance. What I learned from being married is that your wives or your husbands will keep you grounded. And then, well, in my case anyway, then no more going out, no more partying, no more drinking a lot. Because guess what? You're in doghouse. And what do you do then with that time? You work, you're productive, you become a better person, you go to the gym. And that's the investment that paid off well. If you're talking about real estate, a lot of deals we've done. And I think the biggest risk that hasn't paid off yet, but I'm expecting it to pay off, is buying our first mega mall in Piqua. It was a big bet. You were actually a part of that deal.
I remember
And
that.
we bought it now 3 years ago to date. And it's been an interesting deal. We haven't seen any money yet. It's been one-way cash outlay, capital calls and a lot of work for free. But I believe today we bought this property for 3,500,000 square feet. So far, we spent $7 million on it already. I believe once we stabilize this property, it will be worth as much as $30 million.
Yeah,
And so,
I believe the same. It's just going to take time, but yeah, we're definitely made a huge progress of converting Sears, and that's finally stable. Finally, there's no more capital calls, and it's cash flowing. So, tell me about your business and your origin story, how we start, and tell us elevator pitch about BRAIT Capital.
all right. So BRAIT Capital is a real estate investment company with a singular focus on value-add investments. I didn't want to specify like industrial and retail or apartments because I want to be very flexible and be real estate agnostic. As long as we buy something at a deep discount and we can unlock value, every box is a box. Somebody wants to rent it. There's some intricacies, and sometimes I wonder if I was a industrial guy only, would I have better success and luck? Maybe. But BRAIT Capital is a investment company with about 70 or so properties across 9 states. We have 5 million square feet under management today. I don't even know how many tenants we have because we partner with people and I invest in multiple deals. So over 1,000 tenants in our portfolio. Our main focus today is light industrial or conversion of office or retail into light industrial. That's our main focus. We also do a lot of retail as a secondary class. And I came from residential realm. I used to flip houses. I was so lucky to have met my mentor who told me, what are you doing? Why are you wasting your time flipping houses? I was actually offended when he said that to me. I'm like, what are you talking about? I do 50 houses a year. I'm doing really well. And maybe 70 houses a year. I was doing a lot of deals. And he's like, have you made $1 million on any single deal? I said, no. I mean, that's just not typical in residential real estate. And he said, well, I don't do any deals unless I make $1 million. To me, it sounded so complicated, so difficult. And then I said, well, teach me. How do we do this? How can I be a part of this? And he told me about one property. We were supposed to do it together. And we went after it. And then 2 weeks prior to closing, he bounced. He didn't want to do it. And I had basically ended up doing it on my own. I borrowed down payment and raised capital. Long story short, on that deal in 2013, I made $1 million and it changed my life. From flipping houses, I was like, man, I want to do commercial real estate now. And I started buying industrial and retail real estate in my market. Within 5 years, not only did I do a lot of deals, I had a ton of properties in Minneapolis within 30 minutes of my home, but I taught a lot of my friends to do it. And then we fixed everything in Minneapolis. Not a lot of value add deals in Minneapolis.
Not too
Minneapolis
many,
is a
right?
beautiful city. So I'm like, man, my wife is like, why are you teaching all these people? They're competing with you. And I'm like, no, I don't look at it that way. I'm all about adding value. And so if we fixed it up, why don't we go to Chicago? And that's when I met you. And we bought some properties in Chicago and fixed up. And then we went to Milwaukee. We did stuff in Milwaukee. And then we did Decatur, Illinois. That's when I actually purchased my airplane because getting to some of these places takes 7-8 hours. Like go to Europe. I was like, screw it. So we jump on the airplane, we fly in, we do our deal, we come back for dinner. And I think in Midwest, there's a lot of opportunity. It's not as crazy of a market as Arizona or Texas or Florida. Sometimes I kind of feel sad that we're not in Texas or Arizona, but then, what are you going to do? I mean, we have to work with what we have. At least our market is not that crazy. I know that we're not going to have huge swings. Values will kind of be consistent.
But cash flows will be more
Cash flow,
stable.
we have,
Better.
our whole business is based on cash flow. And we offer that cash flow to our investors. We have over 100 investors we work with. We raise capital. We started a fund. And as long as we stick to a really good value add strategy and we stay consistent and not deviate, I think this model works all the time. And it works better during the bad times because there's more distress to deal with.
All right. Right. Yeah, for sure. Now, on the cash flow, my personal experience now on the cash flow, there was much harder to build cash flow than anyone thinks. It requires a lot of discipline. In my particular case is just, I think, selling cash flowing assets sooner than you needed and getting ratio of value add deals larger on your plate. No, I'm just sharing my experience there. And sometimes you kind of trade your cash flowing assets because we have to get to the finish line on your value add assets. I think all this real estate industry is driven by that notion of freedom of cash flow.
From cash flow,
But I think it has a big nuance to it that it's not that easy to achieve. Can you talk about it?
So here's the thing. I don't know everything, but I know that every day I learn something new.
Yeah.
Being an optimist, we go into a property, we overshoot on our projections, and we under budget on our construction costs, and then we get a squeeze, and then we're forced to sell so we can make money. I mean, all these properties will make money regardless. But the biggest problem that I've learned over the past 3 years is that, and maybe it's because of the inflation, because costs of construction have gone through the roof, consistently throughout our portfolio, every single property is over budget on construction, believe it or not.
Yeah.
However, valuations and rents are also higher.
Yeah.
And so as I'm doing the new deal now, like this Indiana deal, I'm baking in a 20% overhead and profit margin on our construction costs and baking a development fee just so I can sustain. If we're developing right now 7 properties or maybe 8 properties, if each property had a baked in 10 grand a month for development, for operations and whatever, we would have had way more cash flow today from these properties that we're working on, and we would have had much better life. Because right now, we don't have that money. We have to work like on Piqua and some other properties. We're working for 2-3 years without getting any money out, but we have to pay payroll and we have to continue operations. That's been the biggest blind spot. I'm changing it right now. I think the future looks great as a result of this little blind spot that we uncovered. But overall, our equity position is huge. Our cash flow on the existing properties are great, but I was forced to sell multiple assets just to stay afloat and finish these over budgets.
Yep.
And that was a big lesson.
So I'm going to add to when I'm writing my newsletter, I'm looking at every single performer that performed 3-4 years ago. So yeah, almost 100%. Here's the trend: over budget on construction, underestimating how long it's going to take, but 100% NOI is higher than the thought. So let's say we're leasing and renting for more money, so valuations come in higher, even the caps went down, but it takes longer and it takes for much more money, and you're getting squeezed from cash. But you're building more value, right? You're building more equity, but less cash.
And if you play your cards right,
yeah,
and if you budget correctly, this could be an amazing business.
Yeah, it is an amazing business.
It is an amazing business, yeah.
Awesome. All right, so I want to finish off with the question, and maybe we can actually talk about a value add network. If you can pick, one advice to that new commercial real estate investors who are just coming in right now in industry, and if you had an opportunity to talk to, 10 years ago or 15 years ago to Rafik, if you can distill maybe to one advice, what can it be?
Right. So I've been very blessed to have met my mentor. I've been very blessed to have joined Commercial Academy, where I got, became a part of the tribe of commercial real estate investors. See, at the end of the day, you are a byproduct of the company you keep. And here's the other thing. I am not who I think I am. I am not who you think I am. I am who I think you think I am. So this whole reality is a multi-dimensional mirror, a matrix of uh, projections, reflections, opinions, beliefs. And so if you are surrounded by a bunch of people who are doing things better, bigger, you will either drop out of the room because you feel out of place and incomplete, or you will mold your identity to become one of them. And so number one advice I'll give myself 15 years ago, join the mastermind. Like I put 30 grand on my credit card back then. It was a lot of money. I mean, 30 grand is a lot of money today, but it was a kind of a scary, you don't spend $30,000 on a like education, but it was the best money spent. And then I sustained and stayed in the room for, close to 10 years now, but also met a mentor. And so having a mentor and being a part of the community is so powerful because they will give you energy, they'll give you data, they'll give you information, they'll give you capital and resources so that you too can achieve whatever it is that you're looking to achieve. And you obviously want to surround yourself with people on a similar journey. So that's one thing. Value add network. Basically, what I did is as I've been building my brand and working on my portfolio, people call me and ask me to help them and ask me to mentor them. And I don't have time. I don't have time to talk to every single person who wants to interact with me. But then I didn't want to be the kind of guy that's prude and not helpful because I want to pay it forward. And so I said, all right, here's what I'll do. I'll do a Zoom call once a week. I'll create a community on Telegram right now, which I think we have 315 people at this time. And I will basically dispense all of my knowledge, all of my experience, share my case studies, and share my resources so that these guys and gals can learn, improve their lives, and become better. I want the value add network to be a group of people who do value add deals across the nation, but also focus on adding value to each other. The culture is so important. And we have so many deals as a result. Like, doesn't make any money. Like, we don't charge hardly any fees on this thing. Value add network is really free, except coaching. But I've gotten so many deals sent my way. And so I am activating people all across the nation, teaching them how to spot value add deals, how to underwrite them, how to understand the value, how to talk to tenants, how to assess budgets. And with that knowledge, and these guys are bringing me a lot of leads. So I don't know, I think over the next 10 years, we'll see what happens, but I think it's going to be a multi-billion-dollar business if we can handle all of this work. Now, I empower everybody to do their own deals, and I partner up with them, and I make sure they partner up with each other. But also, I tell them, look, guys, every deal is a down payment on the next one. Don't be squabbling about, $10,000, $15,000. Be generous, be kind, be honest, be transparent. And if you build that kind of a brand for yourself, there's so much capital in the room. There's so many deals in the room. There's so many opportunities in the room. And all you need to do is step up, offer what you can do, whether it's leasing, construction, whether you can sign on debt, and help. And I believe this is going to be a super powerful group and will basically convert all of the distressed assets in America, just like in Minnesota. There'll be no distressed assets left as a result. All these properties are going to be in great shape. How about that?
How about that? Yeah, that's exactly what it is. Availability to leave the places better than you found them. That's the core.
So that's basically what the network is all about. And I'm very proud of it. I'm glad we have a ton of activity. We have a ton of investors in the group. And I want to elevate each individual guy who, just like me, started 15 years ago with zero and empower them and have them to borrow my confidence, have them borrow my knowledge and experience so they can step up and improve their communities where they live.
Yeah, and I want to emphasize the borrow your confidence. It's a very powerful statement. I know I use that. I can bring up one example. We've met in a buffet line in Turks and Caicos. We hit it off. We, kind of understood each other real quickly. And 3 weeks later, we I think put up a first building contract. I saw that the building has a great value, but I didn't have enough confidence to buy just because I didn't know how to sell it. And even though I felt the value is there, right? And we did it together. We, flipped our first property. That's exactly what happened.
How much did we make on that deal? I don't remember.
We bought it for 750. We put about maybe 200, and we sold like 145. So give it about like close to $500,000.
$500,000. Yeah, that
Yeah,
was
half a
nice.
million
That was a
bucks. Yeah.
very easy deal. I didn't take much time. I remember talking to the seller, and he was a really good guy in automotive business.
Oh yeah, that's a case study by
How
itself.
about that for $500,000 in 6 months after our first meeting?
Yeah,
Not bad.
that's amazing. Yeah, for sure. So look, where can people find Value Add Network?
First and foremost, if anybody's interested in talking to me, I want you to go to my YouTube channel, watch as many videos as possible. I basically show case studies. I talk about deals we've done, talk about how I do things. So like and subscribe. You can DM me also. Our website is www.braitcapital.com. I'm on Instagram, I'm on Facebook. Reach out, DM me. I'll be happy to respond. I'll share with you the link to the network, and we'll be happy to find a way to, add value to you and help you to elevate.
Awesome. Well, that's been amazing. Thanks for sharing your Rafik story. That was great. I know you're impacting a lot of lives. I wish you all success. I know there's going to be so many people like myself who will be impacted by you and what you do and what you share. It's really, really inspiring. And thank you so much. And thank you for being on this podcast. Thanks, brother.
Let me say something in conclusion.
Mm-hmm.
I grew up poor. And when I came to the United States, I remember meeting my friend whose dad sold the business for $40 million. And he was my lender, my private capital partner. And I was like, how come I'm not so lucky? How come we're poor? How come my dad doesn't work as hard, right? And then I remember stumbling upon a news article in the newspaper about a guy who died, and his son, who happened to be my age, inherited $100 million portfolio. And I remember thinking to myself, man, how nice would it be for me to be that guy and just right now inherit $100 million portfolio? It'd be amazing. And I was dreaming about that and saddened by the fact that I didn't inherit a $100 million portfolio. I was flipping houses back then. And then I told myself, until the end of my life, I want to build a portfolio. And 100 million seemed like a lot at the time. I thought by the time I'm 70 or 80, I'll have 100 million. If I die, I want my son to inherit this type of a portfolio so that I can be proud that I did this, even though I didn't get it. This was 2012. I've gotten to $100 million in assets under management by 2020. Unbelievable. I can't believe it. Wow, this is crazy. Now I'm not 70 years old. I still have time. And then I basically continued, and now we're at like 320 million or whatever assets under management. And I think we're going to be a $1 billion company in the next 3 to 5 years. But I thought, instead of keep doing the same thing for me, how about I help 100 guys and gals to get to $100 million in assets under management and invest my time, my effort, my resources, my knowledge, experience, connections. How about that for an impact? Because then I feel like it's paying it forward. And by the way, I'm not Mother Teresa. I'm going to charge, I'm going to be 10, 15% owner of all of these assets too, by providing all the resources. But if I find these 100 guys, or when I find these 100 guys and gals and help them, just like I did, or I think I have 20 to 25 mentees that are doing it right now, but only one guy is $100 million, and that is you.
That's me.
Many other people are 30, 50 million. But imagine the impact and imagine the legacy if 100 guys under my tutelage get to $100 million in assets under management across the United States. Maybe it's international business. I don't know. We'll see. But I'm excited about that. Every day I wake up, and that's my purpose. And that's what I want to do, because now it's not about desire. You see, desire makes you weaker. You want stuff and whatever, but purpose, more you lean into it, more it makes you stronger. So every day I wake up and I think about this purpose and this long-term vision for how it's going to be. It gets me excited. So I'm super proud of you. Thank you very much for being a friend and a managing partner. And I think we're going to do a lot of great things together. But going forward, that's what I want this network to be.
Thank you, brother.
Right?
Appreciate that. Thank you very much.
Thank you.
You've been listening to the Value Builder podcast. For more strategies, stories, and episodes, head to valuebuilder.co or subscribe on your favorite app. Always make it better than you found it and keep adding value. See you in the next one.